What is up, everybody? I know I say that every time that I start the video. It's probably getting annoying to you guys, but um, it is Sunday, 5:30. It is the day before Memorial Day. Happy Memorial Day weekend to everybody. This is Ted with Bodies and Wicks, and quick rundown what we do here. We do not trust in the retail theory series, any retail theory trading. This is more like smart money. So, no such thing as trend lines here. So, no such thing as channels. No such thing as harmonics. No such thing as Wyckoff. This is basically an algorithm. The price is controlled by an algorithm. If you don't believe that by now, you probably should. Because buying and selling pressure is not a thing. If you think that people are out there buying and selling, trying to fight over each other at all times of the day, it's just that's fantasy land. So what this is to show you what the algorithm is and how it works, and how it can predict price off of it and see what is going to happen next. And right now we have Polkadot. I've done a couple videos already, so check out my Bitcoin, my Ethereum, my Cardano one. I just did one on BNB. So now we're going to Polkadot. So let's go ahead and check out the Polkadot browser. Let's see here, make sure I got everything going in place. All right, I do, except for myself, which I don't need myself in this video. So let's just go ahead and trans over. All right, so this is what we're gonna get to eventually, but this is not what we're gonna start off with, because we're way deep in here. This is the last part of it. So we start off with the month, so we can find out where we are right now. So, what I did is, well, let me get this a little bit bigger, and wider maybe. I need that perfect side there, because that is perfect. So, and in between, if you have three, candles and, in the same, what's the word? I forgot the word is. And consolidation, I guess it was the word. Not really consolidation, but three candles in a row. If they leave an open void of price in between there, all right, that's called the fair value gap. These things are known as magnets. And magnets that repel immediately. So that's why I put this right here as perfect, because it came in, especially when price was falling, it came down into that fair value gap and then immediately jumped out. So, and that's just one of the main reasons. You can see there was another one up here, right? Same thing. Here you go, another one. Boom, popped in, boom, popped out. And these are monthly ones, right? So you can't even imagine what happens when it gets down to, the hourly, the 15-minute, things like that. But when you see something like this is very, very good for Polkadot. I'm because basically what it means is it means it's balancing itself, right? Whenever it does this, it balances itself. And price does two things, and two things only. It looks for liquidity, and it looks to balance itself. That's why none of this channel crap works. That's why none of this harmonic stuff works. That's why none of it works, because none of that is looking for liquidity or is it looking to balance. It's just setting up some kind of XYZ theory that you can actually try to predict the next move, and it just doesn't work. It never does. I mean, sometimes it works. It'll work whenever you're in like consolidations and it's about ready to go the other way, like in reversals. But even then, when you're in your reversals, I've seen those X, Y, X, Y, A, B, C things even get worse. They'll make you chase price basically, and then it'll be like, oh, it's gonna stop here, and it never does, and it keeps going. So anyways, that's enough of that, because I'm talking too much already. So we are going to go from the monthly to, I know you see a lot of, notations in here, so we got to get into this so I can show you what these notations mean. Move this guy over here. So here is the weekly. There's not much going on in the weekly, except for it did leave an open fair value gap here. As you can see, I put weekly fair value gap, and it hasn't came into that weekly fair value gap just yet. So we are still underneath that. So that is about the only concern that I have, is that it could get into this fair value gap and then repel. The other one good thing about the weekly is this right here. We did form an order block, a weekly order block, and it stretches. If you stretch it all the way across, you can see that the block that did go down into the fair value gap was also rejected by the order block, and the next block over, which is the current month that we're in, looks like it tried to go even further down in. And it did not, because of the fair value, or because of the order block. I think there was a fair value gap in there as well, and we'll have to get a little bit closer in there just to find out, because I go down the row on these. So now we are on the daily. All right, with the daily, I'm not too worried about what happened in the past. What we're looking at is what's happening right now. So, I don't think there's too much going on in the daily as well. I don't think I had a daily order block. Most of this is balanced, which is good, which means price is stable through here. We just have now that we know what's going on with the daily. Oh yeah, well, one thing I was going to show you on the daily was this. Once price came down here, it doesn't really show you this on the monthly or the weekly, but once price gets down to here and it kind of pops back up, and when it gets back down and it finally gets into this fair value gap, it takes out this right here. So a lot of people could have been thinking that this level right here was your support level, right? And this is why I don't want people to get sucked into, is thinking that the lowest level, at the time is your support level. Never think that, because that is the institutional gold, right? So the people that have all the money that push around this algorithm, right? Because this is all based upon an algorithm. It's not based on anything else. Not based on buying and selling. I mean, that does have something to do with it, but it's mainly based on an algorithm that the people that the big money have, and they're the ones that can push around the algorithm, basically. So people think this as your bottom. All of a sudden they start buying whenever it gets close to the bottom, and what does the people with all the money in the algorithm do? Boom, they just sell it off, and they take everybody out who was actually buying in this area, thinking that they were going to turn around and go the other way. Or the sell stop people. So there's sell stop people that could have had their sell stops here, and then thinking they were going to make money going the opposite direction if it fell below there. And it fell below there for just a little bit. Let me see here. What price was that? Somewhere around 15, and it stops at 13. People with sell stops would probably expected at least to get $10 out of that, and not $2. So they would have definitely taken those guys out, because what's the word that I'm looking for here? Not their limit, but their your sell stop. Geez, my brain is fried because I've been doing too many of these. Let me look here. Your stop loss. That's the word. Your stop loss. So your stop loss probably would have been just above here. So it came down all the way to here. They probably thinking they were getting ready to make a ton of bank, and then it pulls up and then takes them out. But considering this is on the daily, they probably had plenty of time to jump out. They may have made a couple bucks or something, but you know, they didn't make as much as they wanted to. So we're going from the daily to the 4 hour. 4 hours when things start getting fun. Now at the 4 hour, this is where we do have a lot of marking starting to begin, because this is where things start to get a little crazy. So for one, 4 hour fair value gap, this big drop right here causes a big gap in between here. And look, as if you pull it straight over where it got to the current high, right? Boom, it gets rejected immediately. I mean, it got about halfway into it, and generally that's about what happens almost every time, even with order blocks. Order blocks, usually if it gets about halfway into the order block, boom, rejected immediately, and it'll just get out of there. So I just want to measure this to see really quick to see how close it got to the 50% line. It's at the 0. It just passed. Right here is 50% line, and as you can see, it like right, 50% line is right in there, right? So and it got just a little above it. So it's just crazy how close this algorithm can take you. So of course, like I said, oops, I didn't mean to move the fib. The thing here, I think, with the fib is I think it was the same that I had issue with BNB, is that it's the price isn't getting low enough for the institutional people for for what they would like, right? So the institutional people, they know this algorithm inside and out, right? They know it probably more than you do. They hate people that know it, and that can teach. I can't teach it 100%, to my knowledge, but from what I've learned, from watching various people, and also from doing a lot of hours of going back tracking and testing, I can see what's real and what isn't real. But the thing is that, all right, so we're still in the 4 hour. Let me see here. Things probably need to get to the 1 hour, I think, by now. But the 4 hour, I wanted to show that it did cause this big a fair value gap that we had to watch out for. So 1 hour is when things get fun. All right, so we'll get down to the 15-minute too, but 1 hour is when things get fun. So, but oh yeah, the 4 hour is where I go back to the 4 hours where we have an order block down here. So if you look down here, we do have an order block to where you have, even though it's a big long, it looks like this big long, the tail here. It still has quite a bit of a volume of body, not a whole lot of volume of body, but enough to where this is, you can see, as soon as it switches over to the green candle, there's no wick whatsoever. It just takes off and goes up. That's where you can tell smart money is in the room, is when there's no wicks on something. Right? If there's no wicks on something, especially at the very bottom, that takes off like that, that's how you can tell smart money's in the room. So it's boom, takes off, which means right here is where we have this, where the last down red candle is. That's where an order block is. So we have an order block going all the way across. What does an order block do? Which means anytime the price comes down to that same prospected level, it's expected to be rejected. So we would see, if price did come all the way back down here, we would hope to see price get rejected and go back up. All right, so we're going back to the 1 hour. And in the 1 hour, at that same place, at that order block, there is also a fair value gap. So it almost seems like it's a perfect storm for price to come down here, and it almost looks like the order block is directly halfway in to that fair value gap, and that's exactly what, almost every time I see something about a fair value gap, you'll usually see it go about halfway through and then push out. And if you never want to see the price again anyway. So if it comes in here, it does hit the order block, pushes out, which means its dot is setting itself up for a bull run, I would think. So as you can see, even in the hour, we have another fair value gap going through here. You draw all the way across. Boom, what does it do? It gets inside of it, and as soon as it gets inside of it, it pushes itself out, creates another fair value gap, pushes itself down in, but then pushes itself back out, of course, because that's what fair value gaps do. So just ahead of that, right, if we get down into the 15-minute of this, we can even see how close these liquidity points are. So now I put liquidity right here is because if you have a line, right, you can see you have a little bit of a high here, a little bit of a high here, a high here. This is engineered liquidity. What this means is that it's going to make people think that this is the resistance area, right? So what would happen is that the next time, and I think it's going to happen very soon, once it gets up here, right, resistance area, people start selling, because as you can see, every time it gets to that area, it starts selling, right? Maybe it does start selling, and as soon as it does and people start chasing it, it stops, it turns around and goes the other way. But the thing is that there's a fair value gap right above it as well. That fair value gap is in the hour. It's an hour fair value gap. So, but considering it's also just below the line of liquidity, I have a feeling this could just bust right through that fair value gap and not even have to worry about it. Because if it actually hit the fair value gap, it could do this to where it could hit the fair value gap, right? And that would trigger your buy stops. So you could have people that have buy stops sitting just above these guys right here, thinking as soon as it goes through that it's high enough for them that it's going to go up to the next level. And so it could get them to it could trigger those buy stops, right? And so the next thing that would happen is after it triggered those buy stops, could pull backwards, right, and take the buy stops out, right? And also these guys right here that have their sell limits, right, it would take their sell limits and then turn around and then push those up, and then you use that stop loss against them and then take them out with that stop loss. So, and it could do the same thing after it pushes through. It could do another one, to where it does this, and then just, pushes on through after that. So we could see something like that very, very soon here in DOT. But again, the only thing that worries me is that we are nowhere near where the institutions want the price to be. So the institutions, whenever they want to accumulate more pricing to add to their portfolio, to do more trading, to add more leveraging, whatever, they want to do it anything below the 62%, the 61.8, anywhere in between there, and usually the 79. Sometimes you can get down to the 88. So usually their thing is they want to trade in this area, like right in here is where they want to trade. That's where they would want to see price to get before they start accumulating prices, before they send it off and send it up. So that's the only thing I'm worried about, is that DOT could still have the potential to go down into this area, anywhere in between $18.45 and maybe $15, somewhere in between there. If it does get into those areas, I would say start buying yourself. Please do not take financial advice from me. I'm not a financial advisor, so if anybody I just don't want to get sued by anybody by trying to take financial advice. I'm just trying to show you from my experience of playing in the market. This is what happens. I would say what I personally would do is, if it does get down into that area, I would personally start accumulating more DOT. That's what I would personally do. I'm not telling you to do that. I'm saying what I would do, right? So but we will have to see. All right, so right now DOT is in a really odd position. It is stuck in between two fair value gaps and also that liquidity line. But then again, it looks like it's starting to dive a little bit lower. But we're on the 15-minute here and it's barely moving. Probably because it's on a Sunday. That could be one. It's in the middle of the day. Nobody's really doing anything. Nothing's pushing price around too bad. But just giving you a heads up on what could be happening and what price could be doing with DOT coming up in the near future. All right. So again, use your fib. Your fib is your friend, especially once you use these specific outlines for your fib. Use 61.8 or 62, use 70.5, use 79, and use 88.6. These are your areas that you will most likely see price come down to for your institutional money to come in and start accumulating longs. To take this thing long. So, because I don't think we're in a bear market at all. If we were in a bear market, what I could easily do is turn this thing around and show you that we're not in a bear market. So if I went down to here, let me see. Let's take this up here. Look how long they would have to accumulate their shorts. They've had since May 24th to accumulate so many shorts that the market would just completely drop at some point. I don't think that's going to happen because it doesn't stay in one spot very long, because that gives it a clue to other people that, hey, this thing could be staying up here, for a while, that maybe we should start accumulating our shorts too. And whenever the smart money drops it, we'll go with them. Instead, it usually comes down really, really quickly into an area, maybe no longer than 15, 20 minutes, 30 minutes to an hour, something like that. And then all of a sudden, boom, it takes off, because those people are sitting there ready and willing to buy as soon as it drops down in there. And we probably won't see much action until Tuesday, but just letting you know, this is what we're looking at here. So I just want to thank everybody for watching my channel. I hope you got some kind of good information out of this. If you did, please give me a thumbs up. Actually, here, let me hit this this special little thing I got going on here. Hit the like button over here. Yeah, I'm gonna let smash my head a little bit. Well, my camera's cutting it off, but hit the like button, hit the subscribe button, because who knows when I'll be doing one of these and it'll be in the middle of the market, and you'll catch it right at the right time. I was doing these live, but for some reason YouTube says I don't have enough live streaming for it to, I don't know, push through. So, but that's why I think you should subscribe. That way you can get my stuff, because I usually set it on Premiere, and that way you can catch it as soon as I get done recording one of these. You can watch the recording as soon as it's done uploading, and that way you have an idea as to what is going on in the smart money world with these things, right? Because I'm sorry, again, these things do not follow trend lines or anything else like that. If we want to take a look at this, let's just go with the 4-hour here. And as you can see, there's no trend line. There's just no trend line. It went up this way, but or here, maybe it was meant to do this. Let's see here. Yeah, none of this makes sense. So for all you people looking for trend lines, maybe we'll get into the 15-minute or the 5-minute of it. Maybe we'll find a trend line in here. No, we're not finding any trend lines. Okay, see, trend lines don't exist. I'm telling you, don't follow this whole trend line theory or channel theory or XABCD theory. Don't. Right? You need to look up more people that teach smart money, including myself. And others. There are plenty of others out there that have some good information, just keep on learning. That way you're not getting stuck, getting screwed, right? That way you're not one of the people trying to think that you're gonna turn around and hand the market its own but you have no idea what you're doing, right? So. It took me a year. I've been doing this for a year. In my first 6 to 8 months, and probably 6 months or so, I just lost money. That's all I did was lose money because I kept taking retail theory suggestions, and I just kept losing. So I'm sure that's getting annoying by now. Geez. But yeah, stick with me, my channel. Please subscribe to my Patreon. If you don't have any kind of way to trade crypto, everything is in my description below, and I have all my links to to sign up for anything, especially Gate. Gate is the one I like to use. They're probably the best, I think. Or KuCoin or something like that. All that stuff is in there in my description on how to start trading crypto. Or if you want to get started just by putting little bits of money here and there, you can do something like Acorns or something like that. But anyways, I'm going way over time here. I gotta stop. Thanks again for watching, and to always remember to wear your pants.